Now we travel to the city, where Susanna Simons is waiting with financial news in Business Daily.
The Prudential closes a quarter of its estate agencies as part of a radical rethink. The pound tests the 3 Deutschmark barrier. And the G7 summiteers in Houston grapple with the farm trade crisis. Hello, welcome to Business Daily, with the pound hovering tantalizingly below the magic 3 Deutschmark level. Whilst the G7 leaders haggle in Houston, the World Bank's chief economist accuses the developed countries of hypocrisy over agriculture. Why British Rail could lose millions of pounds worth of business for want of a clear policy on freight. And well, they say it's an ill wind, but other people's injuries have been good news for Seaton Healthcare, and today it came to market. The FTSE 100 is down 8.8 at the moment to 2328.7, and the pound up by 0.74 of a pfennig against the Deutschmark at 2 Deutschmarks 98.41. This morning, the Prudential announced a major rationalisation of its property services arm, and as a result of cost-cutting measures in its estate agencies, 500 staff are to lose their jobs. The measures are aimed at putting the property division back on a stable footing. From today, 175 estate agencies are being closed, reducing the total number of branches to around 500. More competitive commission rates are to be introduced. There's to be an increase in the amount spent on advertising property in local papers, and the company aims to move towards a more decentralised structure of the property division. The move has been seen as an attempt by the Pru's new chief executive, Mick Newmarsh, to stamp his authority on the group. Joanne Hart reports.
As one of the UK's largest financial institutions, the Pru made one of the heaviest investments in the property sector. It spent nearly £250 million buying up hundreds of estate agencies. In 1988, these brought in profits of £17 million. But by 1989, the Pru's property losses had reached £50 million, and the company was forced to make cuts.
When we first went in, we decided that we were going to build a distribution network in the context of the marketplace, which was then quite buoyant. In the last 2 or 3 years, the marketplace has clearly taken a severe downturn, and therefore, although we had a view of the future at the time we started, the view of the future has changed as a result of the experience of the last 2 years. The housing market in the UK has been very seriously affected by monetary policy, and we have to react to that.
Do you not feel, though, that the housing market might pick up and then you might regret your decision?
No, certainly the housing market will pick up at some stage, but in the context of our view of the future, the action we're now taking is consistent with that view of the future. We spent a lot of time in the last 6 months looking at the marketplace in the UK and looking at our position in it, and the conclusion we have come to is that we have to restructure our network.
So you may make more cuts?
I wouldn't commit ourselves to any particular action in the future. The action we're taking now is what we believe to be appropriate.
Now, you also speak of advertising locally and decentralising the business.
Yes.
Isn't this a bit of an about-turn on your original philosophy?
The decision to change the way we advertise PPS and the selling of houses was taken a couple of years ago. Yes, we are now deciding that we will restore our presence in the local marketplace by advertising locally. In fact, we've been doing it again for the last 6 to 9 months, so it's not a complete reversal of a decision. It seems appropriate to us on the basis of our experience that we should go back to the local marketplace more vigorously than we have in the last couple of years.
How much is all this going to cost?
I have a number of estimates which I'm not prepared to divulge publicly. One of the problems is that the action we're taking today is going to have a kind of an impact over quite a long period of time. For example, disposing of the leases of the shops that we are now vacating is going to take a bit of time. It will improve our position.
The downturn in the property market has already forced some finance groups to reduce their presence in the sector, although the Pru's move has been the most drastic so far. Now the city is sure it's just a matter of time before a number of institutions follow in the Pru's footsteps with more savage cutbacks.
Joanne Hart. The recent rise in the value of the pound continued overnight in the Far East, and in London this morning sterling is still trading ahead of yesterday's close, which itself came after a 2.5 pfennig rise. With a peak in Tokyo of 3 Deutschmarks 99.67, the pound is now standing at 2 Deutschmarks 98.41. A lot of upward pressure on sterling has been due to speculation that the government will take the pound into the exchange rate mechanism of the European monetary system, but it's also been buoyed by strong words from the Chancellor John Major on maintaining high interest rates. With me at BZW to discuss where the pound goes from here is Mark Brett. Mark, up by 0.74 of the Pfennig at the moment, so it seems to be pausing for breath, but is it just a pause?
Well, that's certainly what the foreign exchange market thinks. The whole market is now in full gung-ho mode. It's looking at the 3 Deutschmarks level, and I'd be very surprised if it didn't have at least a test of that level. But certainly the market itself is extremely bullish, and not just in the UK, but around the world.
Now, of course, we know that it's all buoyed up by the speculation about us going into the ERM, and obviously helped by John Major's comments last night. But why do you think he is talking the pound up?
Well, that is the big question that nobody is bothering to ask at the moment. A lot of people are assuming it's being talked up in order to join the ERM at a very high exchange rate, like 3 or even 305. I would question that. I think it may be being talked up simply to put an extra little squeeze on the domestic economy. In other words, nothing to do with the ERM, just simply to squeeze the exporting sector, which is the one buoyant area still of the UK economy.
Because, of course, Mr. Major reiterated last night the fact that we would not join the ERM until UK inflation was more in line with the EEC average. So it's not going to be an early option, is it?
No, it isn't, and that's the key point here. The market is assuming that almost a one-way bet in sterling, and the idea that we could join at these levels. If it isn't going to happen soon, and we have 4 or 5 or maybe 6 months yet to go, all sorts of things can happen in a foreign exchange market in that period. And my own feeling is that when everybody is this bullish, you have to question why and wonder if it really can go on.
Of course, in the real world, by now, interest rates would be on their way down, wouldn't they?
Yes, they would. The Prudential wouldn't be closing all those estate agencies if the domestic economy was as strong as many of the city pundits are saying these days. If, in fact, Mr. Major is putting an extra squeeze on now, it may be just to make life easier to bring interest rates down this autumn before he joins the ERM.
Before rather than after, you think?
Yes, I don't believe you can join the ERM with rates at 15. I think it's much more likely that we see rates down by perhaps 2 points before he joins the ERM, and simply because an extra squeeze has been put on via this exchange rate.
Mark, we shall watch with interest. Thank you for talking to us. The FTSE at the moment is down 9 at 23.28.5, and against the dollar, the pound is up by more than a cent at $1.8170. And now look at today's other business news. First company news. The Glasgow-based mechanical engineering group Howden has announced annual profits in line with market expectations at just over £22 million. That's a rise of 29%. The company says it has healthy order books and, despite the current economic climate, is well placed for the future. The London brewer Fuller Smith & Turner is to buy 44 pubs from Incoop for £9 million. The houses are at Oxfordshire and Buckinghamshire, and Fuller's has said it intends to expand its estate further in the light of the Monopolies and Mergers Commission report on the brewing industry. Year-end profits at Porter Chadburn, the fabric and leisure goods distributor, have risen 69% to £7.2 million. That's slightly below brokers' predictions. Shares on the move this morning. The hotel and leisure chain Trusthouse Forte is 9p lower, following a downgrading by 2 brokers. The Bradford Mail Order Group Empire Stores has risen 5p on better than expected results. Profits fell 97% to just £172,000, but analysts had been expecting a loss of over £1 million. And Christie Group, the estate agency which specialises in finding pubs, hotels and restaurants, is 4p lower after disappointing results. Profits fell 74% to £1.2 million. On the gilts market, trading has been very quiet. The shorts remain unchanged, while the longs are up a half. The main news headlines: the Soviet leader Mikhail Gorbachev has been formally nominated for re-election as the Communist Party General Secretary. 7 others have also been put forward, including Edvard Shevardnadze. According to TASS, the election will be held later today. The finance ministers of the 7 leading industrial nations have agreed that there should be no aid to the Soviet Union until analysis is made of the country's needs. The G7 leaders decided to call upon the EC's expertise, along with the World Bank, the IMF, the OECD, and the new European Bank for Reconstruction and Development. And UEFA, European football's governing body, has lifted unconditionally its ban on English clubs participating in European competitions. They have been excluded for 5 years after the disaster at the Heysel Stadium. The Foreign Secretary Douglas Hurd has called on the major industrial powers to compromise to avoid a split over the issue of farming subsidies. The threatened rift has emerged at the Houston summit of the 7 leading industrial countries, with the US claiming that international economic stability is threatened by the subsidies given to European farmers. The summit comes as world trade negotiators try to agree the so-called Uruguay round of trade liberalization measures before the end of the year. Here in London, the chief economist of the World Bank, Stanley Fischer, has accused the developed nations of hypocrisy over the question of farm subsidies. Our city editor, Greg Wood, reports.
When it comes to farming, there's no doubt whose snouts are deepest in the trough. It's estimated that the world's 24 richest countries consumed agricultural subsidies of nearly $250 billion last year.
I think there's a real problem there. We in the World Bank have been urging our developing country members to open up to trade because we know that that's the road to faster growth. They've done it. Of course, it's politically very difficult to do that. There are always interests within each country that are opposed to free trade and that suffer when you open up. We've been doing that with the full support of the industrialized countries, but when we come to an area in which many developing countries have a comparative advantage, agriculture, we find that the industrialized countries are not willing to open up.
The problem is made more serious for the developing countries by the fact that agriculture is often the mainstay of the economy.
The problem for the developing countries is that they need to trade with the more industrialized countries. The road to growth is through industrialization. They need the markets of the industrialized countries. They need access to them. And if they don't get it, I think their growth will be slowed down quite significantly.
Although US agriculture is heavily subsidized, it's the attitude of the European countries which will determine the outcome of the Houston summit.
We don't know at the moment whether the European countries will agree to instruct their negotiators in Geneva to change their line on agriculture. And if they do, the Uruguay round will probably succeed. If it goes into slow motion for another few months, I think it's very unlikely that the Uruguay round will succeed. So we're waiting today or tomorrow for a really crucial decision.
The present method for agreeing trade liberalization measures, the General Agreement on Tariffs and Trade, involves compromises being reached by nearly 100 nations. The World Bank favors Canadian proposals to replace GATT with a more powerful international trade organization which can knock heads together on this most central of issues for the developing world.
Greg Wood reporting. Today, the Rail Freight Users Group is stepping up its campaign to persuade British Rail to come up with a clear policy for freight transport in the 90s. The pressure group says its members, which include ICI, Shanks and McEwen and Ciba-Geigy, are being forced to turn to the roads in the absence of a clear strategy from British Rail. Joanne Hart reports.
British Rail has long been associated with losses, breakdowns and inefficiency. While the government makes clear its plans to expand our road service, news of British Rail is generally linked to closures rather than expansion. Yet the Rail Freight Users Group is convinced the rail service can be profitable.
There is a network there, and there are a lot of enthusiastic customers that wish to increase their business on the railways. We see an enormous potential when only 7% of freight is handled on the railways, and there is a growth market there. And that, coupled with the environmental benefits, makes it very attractive for the future.
In the meantime, though, the monopoly continues to be loss-making. So why should the government show any enthusiasm for throwing money at it?
The government ought to be looking at British Rail as a system for the future. The Europeans are spending 4 times the amount of money than our government is on their rail system.
The RUG has so far been frustrated in its attempts to talk to British Rail. It wants to discuss ways of moving forward together into the future.
We would like to talk to British Rail about what it wants to do in the future. We'd like to see them stop selling off large quantities of rail-connected land, which really is going to shoot them in the foot for the future. And we would like to see a dialogue for constructive growth of freight by rail.
The Rail Freight Action Group is convinced it needs to act fast. Government decisions need to be made on the Channel Tunnel link and on Speedlink. And in the meantime, more and more companies are committing themselves to the roads.
Joanne Hart. Well, the FT100 now down 9.1 at 2328.4. So, Vicky, share price is looking a little the worse for wear today. What's upsetting all those investors?
Well, I'm blaming the pound. That's the culprit there. I mean, it's great to see a strong pound if you're off the sunny climes, but for a few of the exporters, it's making life a bit hard. And because the market is very quick to pick up on this sort of thing, they'll try and generate a bit of business if they can. And they're pointing out that a tough pound, a higher pound, is certainly going to make it tough for the exporters. Therefore, a few of them start to trim back their estimates. Added to that, you've got the situation where yesterday the professional investors were selling the premium on the FTSE in the life market, and then reinvesting some of the money selectively in the equity market or the cash market. And as a result, the fall wasn't that great. It was only down a couple of points. Well, since the premium's been eaten away just a little bit, the equity market's just started to slide. I would have thought the slide could have been a lot worse than it has been over the past few days. It's held up quite well, and that is mainly due to the future. But how long that situation can continue remains to be seen. At the moment, there is a healthy premium on the future, but it's not likely to stay there forever.
You mentioned the effect on exporters, but what's been the impact on those companies that rely on currency fluctuation?
Well, it's been quite bad. As I say, they've gone after companies and marked the usual ones down, the ICIs, the Glaxos, who are big exporters. But now they're starting to single out the individual ones, and a classic case in that today, as we heard in the news bulletin, was Trust House Forte. American tourists like a strong dollar, and they've not got one now. So therefore, we can see a tail off in American tourism probably next year, but already several brokers have decided to downgrade this morning. I think Panmure Gordon is the most significant one. They've, I think, lopped 27 million off their estimate for the full year to 27. They're even looking for a downturn slightly at the halfway stage. They've got other problems such as the provincial hotel side and the catering side. They're not doing that well, so downgrade the profits.
Mickey, thank you. Well, time for the break now. Coming up, how to make small companies more attractive to the small investor. And Seaton Healthcare comes to the market in an increasingly rare share placing. That's all in a couple of minutes. Join us then.
Neither a borrower nor a lender be.
Oh, that's true. That's very true.
Penny wise, pound foolish.
Well, yes, of course.
All that glitters is not gold.
Oh, of course, that's so right.
You can't take your money out of a building society high-interest account without incurring a penalty.
That's true. That's very true.
Oh, no, that's false. Actually, for example, with Nationwide Anglia Capital Bonus account, you can take out a lump sum with no loss of interest.
Capital Bonus offers immediate access to up to £3,000 once a year.
Mares eat oats and don't eat oats, but little lambs eat of the ivy.
Well, that's gibberish.
Yeah, you win again.
The Nationwide Anglia Capital Bonus account. The answer to the problem.
Right, Richard. Final rehearsal. First, you savour the aroma.
Aroma. Lovely. Now do I do it?
Not yet. Then you enjoy the rich, smooth taste.
Taste, right. Delicious. Now?
No. Then you tell them Nescafe don't make coffee for anyone else.
Right. Why is that?
Because Nescafe like to keep those special beans just for themselves.
You said I could do that bit.
Nescafe. Coffee at its best.
I've been looking forward to that all day.
Untwist again, like we did last summer. Untwist again, like we did last year. Untwist again, have a little slumber. Untwist again, untwist and tie again.
morning, investors got more details of a new company coming to the market, an increasingly rare opportunity these days. The Oldham-based health products and sports equipment group Seaton Healthcare decided to take the plunge and is coming to the market by way of a placing with institutions. Seaton will release approximately 37% of its equity at 130 pence per share to raise a total of almost £8.5 million. Joanne Hart looks at the company's reasons for coming to the stock market now.
It's taken Seaton Healthcare nearly 40 years to come to the stock market, since it was first founded in 1952. Then it existed as a small family-run firm, which made bandages. Now it makes a whole range of healthcare and sports products, and has been highly profitable on a private basis. Even so, Seaton now feels the need for a partial flotation.
Basically, there are four reasons which I would describe as enhancing our group profile, enabling us to pursue a much more aggressive acquisition strategy. Of course, coming to the market will also enable us to reduce our gearing, and of course it will also enable us to further motivate and incentivize our employees.
Yet the stock market has been extremely volatile in recent months, and small companies have fared particularly badly. Seaton remains convinced that its shares will prove attractive.
Our business is all about health, and no matter what government does, they cannot do anything that is going to stop people from growing older. And of course it's true that the older people get, the more health care they require, and a great deal of our product range is designed for the elderly patient.
But do you really think that you're going to attract shareholders on that basis?
Yes, I do, because I think the shareholders want to have an interest in companies that are not so cyclical but more predictable. And healthcare and the need for healthcare is very predictable.
There have been suggestions that Seaton will need the backing of a larger firm to survive. But the Seaton management, which will raise around £2 million from today's placing, is confident that it can stand alone, at least in the short term.
Joanne Hart reporting. The percentage of quoted shares held by small investors could fall even further if the stock exchange fails to sharpen up its act, according to the chairman of ShareLink, Britain's largest private client stockbroking service. The complaint comes at a time when fewer and fewer small investors seem to be involving themselves in the market. Jane Alexander looks at the future of private client business.
The government's campaign to privatise British Gas was aimed at SID, the small investor. And as in other privatisations, many SIDs did buy shares. But few of those investors have been persuaded to make regular forays into the stock market. The vast majority have stuck to a couple of privatisation stocks, and the percentage of the stock market held by private investors is in decline. Those who serve private clients think it's time for radical change.
I think we need to start from basics and really look at the shape and structure of the industry and build and put in place a marketplace and a settlement infrastructure designed specifically for the needs of the private investor and the small company.
Does that need to be separate from the existing exchange?
I think it does, and I think that's for normal business practice reasons. If you want to achieve something important in a relatively short time frame, which I believe we need to, the best way of doing that is to allow it to be focused and concentrate on one job and not attempt to do many things simultaneously. The stock exchange has important things to do to protect our institutional marketplace and develop in Europe. I think the concentration needs to be directed there, allowing others to take up the needs of the private investor.
The Chancellor, John Major, has expressed concern about the increasing dealing costs small investors have experienced in recent years. But those campaigning for change don't think cost is the main issue.
Inherent within this will be a review of the costs. Again, I don't believe that costs are the fundamental problem. We need to look at availability of information, we need to look at ease of use, we need to look at reliability and consistency. Those are very important quality factors. Without them, cost is an irrelevancy.
If nothing does happen, what would it mean?
I think the decline of the private investor and the companies that seek to serve them. I believe that there will be a massive failure of stockbroking businesses over the next 5 or 6 years unless something fundamental is done with the shape and structure of the industry.
David Jones of ShareLink. And now a quick roundup of the markets. In Tokyo, worries that Japanese interest rates may rise drove investors to the sidelines. The Nikkei closed 386 points lower. On Wall Street, it's likely to remain extremely quiet. Traders at Dean Witter expect the Dow to open 5 points higher. Bonds, the US long bond is up 3 ticks in New York, yielding 8.54%. On life, the September long gilt contract is 14 ticks higher. Oil, a barrel of Brent crude for August delivery, is unchanged at $15.85. And the bullion market has been busy this morning. Middle East selling has pushed gold $2.70 lower at the London morning fix. The main business headlines again. The Prudential has announced that it intends to close a quarter of its estate agencies as part of a radical rethink. Chief Executive Mick Newmarsh told Business Daily the changes would put the whole of the Prudential in a better position. The pound has continued to test the 3 Deutschmark barrier, with traders saying crossing it is a matter of when, not if. And as the G7 leaders get set for the second day of their summit in Houston, when they'll tackle the farm trade crisis, the World Bank's chief economist has accused the developed countries of hypocrisy over agriculture. A last look at the FTSE for today. It's now down 8.8 at 2328.7, but attention during the day has been focused on the pound. At the moment it's up by 0.74 of a Pfennig against the Deutschmark at 2 Deutschmarks 98.41, and against the dollar it's up by 1.30 cents at $1.8175. And you can find out what happens to it in the world's markets overnight by joining Dermot Manahan at 6:20 tomorrow morning during the Channel 4 Daily. I'll be back at lunchtime. See you then.
On ITV.